Shit, pal, money machine going brr. Chairman Powell, he ain't playing this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew, navigating through the markets, knowing what to do. Federal Reserves in control, making moves, keeping that money flowing so the economy can groove. Share power, making paper every hour. Share power, he got that money power. Data on his side, watch him rising the power. Yeah, he's the chairman of the board, making moves that empower.
Let's go. Good afternoon, ladies and gentlemen. I am Tom Powell, the super chairman of the board, and it is with my greatest honor I am here today with you all. It is a historic, monumental day. We have seen quite a year here at the Fed. My supervisory role will continue into next year. However, many tough decisions must be made between then and now. Walk with me, if you would, through the year. In January, the Fed decided to keep interest rates steady with no rate cuts. There was a hawkish tone from Chair Powell, ruling out March cuts and emphasizing ongoing balance sheet reductions, known as quantitative tightening. Very, very spicy. Expectations were set for 6 25 BPS cuts starting later in the year. Fast forward to March. Rates were maintained at the same level with market expectations. Cuts starting in May. The FOMC's dot plot presented by my colleagues indicated a 3/4 point reduction in 2024, aligning with December's projections. However, forecasts for 2025 Fed fund rates were adjusted upward from 3.9 to 3.6%. May 1st, the Feds continued to hold rates steady and decided to slow the pace of balance sheet reduction. Quantitative tightening was just to ensure a smoother transition and ample reserve environment. Fast forward again to June. Rates remained again unchanged for the 7th consecutive meeting. All hope seemed to be lost. However, the Fed raised its 2024 inflation forecast from 2.4 to 2.6%, with the median projection showing just one rate cut for the year, followed by expectations of 100 BPS of rate cuts in 2025. It took until September. The Fed finally cut interest rates by 50 BPS, the first rate reduction since 2020. This action was accompanied by projections of 2 more 25 BPS cuts in 2024, aiming for a total reduction of 100 BPS in the year. One Fed governor dissented, but who cares about that guy? November 7th came around, and unfortunately, I nor Tom Crown were able to cover the FOMC, and it was with our deepest apologies. I truly am sorry we were not able to be there for you like we are every month, and we have been for years and years and years. But here we are. We got a 25 BPS cut, bringing the federal target range from 4.5 to 4.75, and this move was in line with the market. Here we are in December. This is the final FOMC in the year, making it not only the biggest in history for this year, but the most spicy. And I unfortunately have a little bad news to share with you all. On top of it being the final 2024 FOMC, it is also the final FOMC with our beloved, beautiful, perfect angel, Gina. Can we have a moment, ladies and gentlemen, to reflect on all the times Gina's made us laugh, made us cry, made us informed about the FOMC just because we wanted to catch a glimpse of her and her wonderful questions. But she will be here today. So it is with my greatest honor I will turn over the mic to my colleague, Tom Crown, who will cover us from here. Thank you. And bless you all. There we are, ladies and gentlemen. Tom Powell joining us for the last time, a rare appearance on this show, giving us the alpha. Here we are, boys. This is big. This is spicy. The biggest part, honestly, is Gina. Let's also take a second here. Who also realized that Gina's departure lined up suspiciously with Asian Gina coming around? What? Put a 1 in chat if you noticed that. What is that? I guess it's when we needed her most. Asian Gina was there for us. And maybe that will cement her place in our hearts going forward. I certainly hope so and know so. I know you all will appreciate it. You all are here with me. So let's talk really quick about what we're going to do during this stream, what's going to happen, implications, what means what we think is going to, all this stuff. Let's go over this quick. First thing, we just started the stream. It is 1:36. In 24 minutes, we will do the ceremonial group Googling, group searching for the interest rate decision. For some reason, and I still do not know after covering this for years, they released this interest rate decision to different news sources before Chair Powell comes on. And so we have to basically Google it. It will be released at exactly 2 p.m. as it always is, and we will Google it together. I'll remind you right before 2. So we have about 25 minutes. At 2:30, Chair Powell will join us. He will speak live. At about 3 p.m., Chair Powell will probably shut up. And that's when hopefully we'll see the wonderful Gina and Asian Gina ask questions. We've got a poll going in the chat, guys. Could you please engage, by the way? Smash the like, smash the subscribes, share the stream out. Help hype it up. Let's get this stream popping. We got 1,100 viewers. Let's make it 10,000. 11,000 viewers. We can do that with your help. Just keep engaging. Gosh, Gina. I'm gonna miss you. I'm gonna miss you. This hurts. This digs deep. But enough about me. Let's see. What else do we got? Let's look at the Fed rate monitor tool. Seems that though this is the spiciest, it does not appear that the market is looking for a shakeup. 25 BPS cut has been pretty expected, all but 100% priced in. Looks like I want to say that's like right as November. Right as December started, we saw the market expectation climb up to 25 BPS. There is a small outlier, less than 1%, looking for a 50 BPS cut. What is really interesting, though, it's not the 50%. It's not even the almost certain 100% 25 cut. It's that no one in the market is looking at an interest rate hike. Interesting. I personally don't want one. But if you take a look at some of the numbers, job numbers, CPI numbers coming out, inflation may not be cooling to that 2% target. So is the Fed going to stick to that rhetoric, maybe increase interest rates? Or are they just going to basically drop the 2% inflation target and just continue cutting rates? Number go up, things are good. You know which one I'm betting on and which one I'd prefer. Number go up, baby. Let's go. In front of you, this is also part of the warm-up. In front of you, we have the Bitcoin chart. Below that would be the dollar or Dixie chart. And on these charts, you will see marked when we go live, the interest rate decision and Chair Powell live. And we will watch price react together, as we always do, to these historic, monumental times. And it gets very spicy. I want to start with also, guys, this is a very volatile day. Extremely volatile. I do not open trades on this day because we tend to see extreme volatility to both sides of our trade, to the long and short side, that result in what ends up being a wick and really beat up leverage position. So I caution everyone, please use this stream. We'll try to entertain you. We'll keep your finger off the trigger for a little bit. Play it safe today. If you have a stop loss, expect it to be hit. And honestly, I would wait until this interest rate and Chair Powell speak to really assess anything. So we have what I'll call the FOMC cheat sheet of price action, and that typically goes something like this. We have two major inflection points today, and that is the 2 p.m. interest rate decision, followed by the 2:30 Chair Powell speaking. And really outside of that, we just tend to see kind of a trend, okay? So heading into the interest rate decision for the next 25 minutes, what we usually look for is for a local trend in price for Bitcoin, and I'm going to say probably the dollar. Yeah, probably the dollar. That might be a downtrend. That's looking like a downtrend, definitely on the dollar, less arguably on Bitcoin, but definitely on the dollar. So what we tend to see is that downtrend into the interest rate decision, or whatever trend we're doing, reverse on the interest rate decision, usually bringing us around to where we started. I'll say a lot of the time higher. And this is what I said about risky trading. You know, you open a long or a short here, you're getting stopped short, you're getting stopped long. And then into Chair Powell speaking, we see one more reversal. Now, this is never guaranteed. Nothing in trading is guaranteed. However, it usually ends up looking like this. A move that reverses, stops, hunts positions in the other direction, reverses again, and ends up roughly where it started, leaving everyone sad. So keep an eye on this pattern. I would say it's played out about 80% of FOMCs. That'd be my guess. These numbers, of course, when I'm pointing down, can be much lower. The rally or whatever, the swing high can be much higher. I'm just giving you kind of the blueprint here. This is going to be very spicy, as it always is. So let's get rid of this as well. We will keep an eye on not only the dollar and Bitcoin, but also the S&P 500 and gold. Gold hanging out below all-time high, looking like not really catching bids at the moment. 2,600 S&P, really the same idea here. Let's just open this up quick. S&P 500 at all-time highs virtually, flagging out. The words of Chirp How may be enough to move this market. It may be enough for a breakout. We will find out live together. That is right. I'm going to get rid of these for now. I don't like the 4 chart setup. It's too much going on. So I'm going to set alerts on gold and on stocks, and we're going to go back to the 2 chart, and then we're going to take a look at a few more things while we have time. We don't have much time. I know I'm pushing through. Ooh, pushing through. We're getting to it. There we are. Perfect. Perfect, perfect. Double perfect, triple perfect, you're all perfect. All right. There it is. Excelente. What's our time check? It is 1:42. We have 18 minutes, my friends. 18 minutes to all 2,000 of you out there. Hells to the yeah. How are y'all doing? Can we get a chirp how? Can we get a chirp how? Chirp how? Sherman Powell, I have a question for you, Sherman Powell. What do you guys think is going to happen today? How you feeling? Are you feeling bearish? You feeling bullish? You feeling hawk 2-ish? Tell me. Tell me how you're feeling while I play a little bit more of this. I'm gonna listen to this again. By the way, guys, if you like and subscribe, well, if you engage with the live, YouTube will show it to more people. But if you subscribe while we're live, this number right here down next to me will update in real time. Your name will pop up. I'll get to shout you out in front of 2,000 people. I saw a few subscribers while I was getting through. There's another one. Hell yeah. Hell yeah. CF, IND Investing, Rodoloff, Lancelot. I see a lot of new names. Welcome to our fam, guys. Check out our Discord. It is free, discord.gg/TomCrown. And we are launching, or just launched, we're in like a soft launch of an educational crypto course. You can check it out on WAP. We already had our first signups. Like 5 signups already. I'm going to dedicate my life to making that the best trading resource for any trader of any level, from zero to hero. That is the plan there on that WAP, wap.com/crown-crypto. Check it out. It's going to be a good time. To the chat, Spicy. What's up, Aston? How you doing? Shout out to you, my friend. Shout out. I wanted to play this again, but I want to blow your speakers. Hold up.
Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain.
You can dance. Go ahead. Sorry.
Through the markets, knowing what to do. Federal reserves in control, making moves. Keeping that money flowing so the economy can groove. Share power.
Getting ads?
Making paper every hour. Share power, he got that money power. Data on his side, watch him rising the power. Yeah, he's the chairman of the board, making moves that empower.
If you're out there and you can't dance, don't worry. You can just laugh at me dancing. I don't know how to dance. You can see me. I'm a very white guy. I don't know how to dance, but I like doing it. So what's up with these ads? People saying ads? Stupid ads keep popping up today? Hold up. Hold up here. If there are ads while we're live, let me double check. Maybe YouTube. Okay. YouTube might have pulled a sneaky on us. Hold up. Hold up. Let me know if there's any more. There shouldn't be any more. YouTube might have pulled a monetization sneaky. You know YouTube loves one thing, and that's serving ads, my friend. You know it. Alcohol helping white people dance since 1930. Bro, 1930, try like 1390. That's right. I'm white. Actually, no, I'm Irish. And a little, what color am I here? Orangish? Reddish? I don't know. I decided to go no more bright lights. In the bear market, will I give dance lessons for morale boosts? Absolutely. Absolutely. I don't know why you would take my lessons, but that's okay. What's up, Federico Marquis subscribing? I see you. Grant Lawrence, Dave Von Beaton, and a bunch of other names. Keep them coming, boys. Join our fam. This is the home of the FOMC, by the way. Just a quick thing. I know there's a lot of new people in the crypto space over the last month or two. We invented this. Whatever anyone else says, we invented this. Now, I didn't invent the Fed. That's actually Tom Powell invented the Fed. But we invented this event. We have been covering these for years, long before anyone cared, long before anyone watched them. We were doing these to like a 50-person audience, 3-4 years ago. Then things got very interesting as the Fed took action, moved rates down, moved them back up, moved them back down again, and the whole world kind of caught on. It's interesting. Every crypto channel, pretty much all the TradFi stock channels and mainstream media cover this event now. We did it. We made this. We did it. It's crazy. We've been covering these before everyone, and you were part of it. You were here. We can always share that together. It's pretty wonderful. I love that. The F in Fed stands for Tom Crown. That is actually true, Gabe. How you doing, bro? What's up, chemistry bro? Jazzy Orange. We were the first, Jazzy. It's not just me. It's us. I wouldn't do any of this without you guys. It's us. We share it. But if you see anyone else claim that they started, tell them to go F themselves. They're lying. What's the best way to offload crypto product? What's the best way to offload crypto profits into a bank account? Scooby Dooby is one of my favorite names, my friend. If you're in the US, Coinbase or Kraken. There you go. Easy. Easy peas. Easy question. What's up, Armin? TRX? I don't know if we have time, my friend. We got 13 minutes. You liquidated. Minus 100. What? You're minus 180,000. Hopefully 180,000 of whatever currency that is, not dollars. What do you think about FIL and the targets? Moon TA? Man, I haven't looked at FIL in a while. We're not going to do requests right now. Armin, though, I want you to know I appreciate you. I see you super chatting all the time, but we got to keep this honed in. We got to keep this FOMC'd. If we got a little time later, maybe we will. Maybe after the interest rate decision. We only have about 10 minutes until we learn the decision itself. So we're going to stay on topic or else I will get very off topic. What's up, Matthew Schmid? It's a nice Trumpish orange hue. You know, the last picture I saw of Trump, he was not orange, and I was shocked. I'm really not this orange in real life. It's the lighting. It is what it is. It was boring all the time besides Gina. Yes. Well, you know, that's the goal here. The Fed meetings are pretty boring. They're pretty dry, but they are very important. Or at least they can be. And the goal of these events, the reason we started doing these is one, because, well, Bitcoin, F the Fed, burn the banks, you know, kind of related there. But two is to try to make it a little more entertaining, a little more interesting, and just enjoy them together, right? Because I know I wouldn't listen to these without you guys. You guys probably wouldn't be listening to these without the fam, without the group. So it is what it is, and we are here together again. You need QE? That's right. We need that easing, baby. We need that easing. So far, Bitcoin and the dollar just following the trajectory. Not doing too much. That's okay. The spice is coming very, very soon. Very, very, very soon. Hold on to your hats because it's coming. You just got an alert for Dash. You got your alert set tighter than I do because I did not get a Dash alert. I got an XYO alert. Let's see. While we have a sec, all right, maybe I'll be able to pull up TRX. I'm going to just pull up these quickie charts. That's what she said. A little quickie chart. XRPzels. No, that's not what we're looking at. XYO. XYO selling off. I think that was an entry for a long in another chart. Interesting. XYO and whatever SWFTC. Not really familiar with either of these coins. Their charts are exactly the same. Look at that. Flag breakdown. Actually, it kind of looks like flag breakdown liquidity sweep. That's okay. That's okay. What else we got here? Total. Got an alert for total down. I wouldn't be too worried about that total. Just taking a little breather there. Down 1.4%. Nothing to worry about. What's going on with here? MOG. Nothing. Man, these alerts are not spicy. Let me pull up TRX and Dash too. Real quick here. That was not the TRX chart. That was the crypto cap. Do Binance futures. Oof. 23 cents. I think we were talking about 25 cents. Man, I'm sorry, Armin, if you got liquidated on this, I feel bad when anyone here loses money, guys, period. You probably have noticed by my choice of monetization on this. In fact, my lack of monetization on this channel, really this educational course trading thing that we're just launching now is like the first real monetization we're doing. And that's so I can stay out of the influence of of the exchanges. I felt like the exchanges maybe were getting too much influence on me, too dependent. So we're starting our own thing. But I feel bad when you guys lose money. I did say every single time we looked at this chart since 40-ish, whatever, guys, this is a knife. It's a knife. At 31 cents, maybe we could have had a bounce. And then that was just because we had previous all-time highs there in other exchanges. But I said, even there is a knife. And if you're going to trade that, you got to have a tight stop. Look at lower. It was like 25 cents, maybe down to 22. But guy, you're at all-time highs. You're retracing. This is a knife. And I'm sorry to hear that maybe some of you guys lost money. That does happen. It does happen. Peanut. Oh, this isn't Peanut. This is Ondo. Ondo hit $2 last night. Retracing. Looking healthy here, though. 83 cents on Ondo never filled, but $1.50 did. On the real chart, I guess this isn't the real chart. $1.50 filled back here, so we're still cruising on that. I gotta make sure I have alerts. Yes. ETHBTC, anything good? Ooh, no. We looked at this literally on Monday. ETHBTC low time frame here. There it is. This is what I was worried about. This is why my Ethereum short is still alive, still cooking. I'm actually surprised by that. Ethereum painting lower highs, retesting 0.37 against Bitcoin in valuation. We looked at this literally Monday. And I said, man, what I'm worried about here is we test 0.37. We come back up for a lower high and we test it again. We break through. We're looking for lower lows. Ethereum's still struggling, unfortunately. Gnarly kind of head and shoulder, whatever pattern you want to call it, flat bottom, low highs. Ethereum struggling. I really don't like being bearish on Ethereum because I think that's more bearish for the entire space. And I'm not bearish in like a doomy way. I'm just skeptical. It needs to prove to me that it has what it takes to go back to all-time highs. Many coins from its era did not, or spent the next two cycles kind of just revisiting and then going back down. And I'm worried that that's what Ethereum's going to do in this cycle. It's just a irrational worry. It's just me, guys. Don't worry. You don't need to freak out, sell all your Ethereum. But my short from 4K now not looking quite as bad, huh? Ethereum giving up some of those gains. Not too bad. 153, we have 7 minutes. You guys ready for Christmas? How much money did you spend on Christmas presents? I will be the first to go. Way too much. I got like $8K back from the government because I overpaid my taxes. And I think I spent all of it on Christmas presents for people. That was very irresponsible. So I need you guys to sign up for my trading course. No, I'm just playing. What I need is Bitcoin and especially Litecoin to go up. Maybe I can cover some of that, my friends. I can cover a little bit of that. That's all right. ETH is like the opposite of Bitcoin. Or for you know what it is? Just really quick, I want to rant. Just really quick. It won't be long, I promise. Promise. You're like, this is going to be long. We're going to miss the FOMC. So where was this? September? It was like September of 22 back here. Like Pico bottom. September of 22. Where were we? Around here. You don't see it. This is why we're going to get more into Bitcoin pairs as this bull market progresses. We don't have time right now, but Ethereum would look good if you kind of take this point in time, September of 22. I'm pretty sure that's it. It looks good, right? Big gains. Wow, up. I made money. And then you look at the Ethereum Bitcoin pair and you can identify just right here. This is where the merge happened, right? Wasn't it right here? If it wasn't right here, maybe it was a little earlier. Someone in chat, you know the date. Since then, Ethereum has just lost. It's just given up ground against Bitcoin. And yes, you've profited in dollars. You shouldn't feel bad if you've held Ethereum through this. You're up, bro. Celebrate. The issue is that had you held Bitcoin, what this chart is showing you is if you had just held Bitcoin instead of Ethereum, you would be up a higher percent, a good deal higher. And you know that looking at the charts right now, Bitcoin blasted new all-time high, Ethereum at 4K. These BTC charts, ETHBTC, LTC BTC, XRP BTC, they give you a perspective that is very difficult to see through the dollar pair. When everything is going up, it is very difficult to understand, are things doing well? Because everything's doing well. When you look at the Bitcoin pairs, you can tell would it have been a better choice to just sit in Bitcoin? That's a lower risk, making money on the lowering risk side. And a lot of these charts, this is why I'm worried about Ethereum. We'll see. It could just, I hope it proves me wrong quickly, and it could very easily. But a lot of these charts hit all-time highs against Bitcoin, and so far have spent the rest of their time just going down against it. Does everything trend to zero against Bitcoin? Maybe. Probably. But we'll see. Hopefully I'm wrong. I'm not trying to fudge your bags. I'm not saying sell. I still have Ethereum. I didn't sell it all. I sold a lot of it earlier this year. You guys know that. I was public about it. But anyway, I'm getting too wrapped up. I've seen some new subscribers. Moss Wiss. What's up, brother? Abdullah Faraz. How you doing? Juan Il. Anil Bassnet. Federico Marquez. Who else do we got? YouTube. Into YouTube. What else we got? A few other names. I don't know. I missed them. Keep subscribing. Keep liking the stream. Here's where we're at. We have less than 5 minutes now until this interest rate decision is in. And you can see this on the chart in front of you. Bitcoin may be already reacting to this. Hold up. Maybe already reacting. Where are we? Let's zoom into the even more crackhead time frame. We can't see that far ahead. Maybe not. 15 second. Oh, come on. 30 second. You're just not. Okay, you're not going to have it on my chart. That's fine. Be a bitch then, TradingView. Be a bitch. That's fine. So here is the deal. For those of you not familiar with really what goes down during these FOMC days, and especially people who are brand new to the space and to the FOMC, in 2 minutes and 50 seconds, with delay, I guess, but in 2 minutes and 50 seconds, the interest rate decision will be released. I do not know the manner they do this, but it seems to be like maybe to all major news publications, giving them fractions of seconds to front run you, right? Ain't that American, ain't that capitalism, baby. But giving you seconds to front run. So into that 2 p.m. call, what we do is, as a group, and we have 2,700 viewers right now. That's quite a big group. Hell yeah, fam. We all open a tab. And what we do is we try to Google the interest rate decision. And mind you, it has to be published after 2 p.m. because no one has the answer except for ChirpHal before then. When we do this, I want you guys to put in chat the interest rate decision with a source. Do not just put a number. Wow, Bitcoin may be saying, Tom, I'm not trending down into this. I might be trending up into this, which would maybe be worse because then we're going to look for a dump. We're going to put it in chat with the source, and whoever gets it first wins a mystery prize. That's right. So get ready. -75 source. Trust me, bro. Okay. Trust me, bro, though, is always a good source, but not for this. We need a real news site. Bloomberg, CryptoCrab, whatever, MSN, NBC, all the letters, all the gibbers, you know. That's what we need. I'm going to use cryptocraft.com. They do not pay me, though they always get a shout out during these FOMCs. They don't pay me. Their site looks like something maybe I could program, but they are very good at staying on top of data. And so this is the source I'm going to use. Please, let's use all the sources. Bing, Google, I don't know, ask ChatGPT, do whatever you need. CryptoCraft is good. They should pay me. That'd be nice. -25 Bloomsburg. All right, Bob second. Please, less trolling once it's 2. You can troll now. We have 52 seconds, guys. Open your tabs. Get ready. Refresh it. 1 character. My guy. Hells to the yeah, 1 character. Gifting out 20 memberships. Thank you. I appreciate you. You're the man. Source, 1 billion. Source, Jabberjaw. I don't know what Jabberjaw is, but that sounds reliable. 30 seconds, baby. Let's go. 30 seconds. Congrats to everyone who got a membership. I'll give some out after this, but I'm going to be refreshing my tab. Everyone begin refreshing. We have only seconds left. 20 seconds. Begin reloading. Get the refreshes going. Get them going. Get them going. Here we are. Count it down. 9 seconds, 8 seconds. 6, 5, 4, 3, 2, 1. And the interest rate decision should be in. CryptoCraft says pending. Put it in chat, guys. Who's got it first? 420 rate cut. That's always a good one. Who's got it first? Still says pending on CryptoCraft. Still says pending. Actual. I got 045. Who's got it? Put it in. Volatility engaged. Volatility engaged. Let's take a look. Bitcoin jumping, reacting. Holy crap. Holy shit, boys. Look at the dollar. Dixie absolutely pumping off of this. Holy shit. I'll move the mic away from me. Holy moly. The dollar rocketing 0.25%. No, said Pornhub. No sign in sight of it chilling yet. Holy shit. This is 0.25% in 1 second, in 1 minute. The dollar is mooning off of this. Why? I don't know. I need your best explanations. Let's go. This is why we cover them. Smash the likes. Smash the subscribes. Hype this up, guys. This is bonkers. Bonkers. Bitcoin doing absolutely nothing. I'd prefer that. I want to pay attention to the dollar. What a candle. What a candle. 0.3%. Now, it doesn't sound like a lot, but that is a lot when it comes to the dollar. This is not some meme coin. This is the world's biggest currency. Pushing higher still. Holy shit. Holy shit. This might be the most volatile move we've ever seen for the dollar. Bitcoin dumping. Bitcoin absolutely dumping. Let's see. Let's see the damage. I'm going to open up stocks and gold. What else we got here? Guys, I need your help. There's too much going on in this moment. I'm going to need your help. What else is moving? What else is happening here? What am I not seeing or looking at? This is why we're together, so we can do this together. Seemingly the dollar sending everything down. Bitcoin holding on to lows better than stocks or gold right now, but the dollar showing no freaking signs of slowing. Holy shit. Holy shit. What's up, Kim Shop? Thank you for the month membership. How you doing, Kim? Nice check mark. Fellow check markers. Altcoins are dying. What's happening? Guys, there's too much happening right now. I need your help. Bad candle? Not for the dollar. Not for the dollar. The dollar going bonkers. Stocks and golds definitely taking a beating here. Bitcoin down, but here's how I'm viewing this, right? Gold and stocks broke lows. Bitcoin really just coming back to test the low of earlier today. Of course, that could sell off, especially with the dollar moving in the way it is, but this is holding on much more strongly than, okay, right here, let's look at gold. Gold absolutely down. Lower intraday low, I want to say. Lowest point of the day, boom, down, gold. Stocks reflecting a similar thing, but Bitcoin, baby. Our baby coin. Burn the Fed, burn the banks. Stocks down, breaking. Okay, didn't quite break an intraday low. Gold did. Stocks didn't, but stocks are very, very down. You can see this. Much more down than Bitcoin. Maybe we're getting a bounce. Are we getting a bounce? Let me get back to the chat. I'm like glued to this right now. Holy shit. Holy camoli. This is the most volatile. I told you. Told you it's the biggest FOMC. This is the most volatile I have ever seen the dollar in my life. This candle opened. Wow. Let's mark this on the chart. It's still pumping. Holy shit. 1075? What is happening, Jack? Can you explain this? I do not know. I don't even know. It's about nothing. What are you talking about, Robin? Dude, look at the dollar. Robin, how much crack are you on and can I have some? In just like 3 minutes, the dollar has moved up almost 0.5%, bro. That's like a whole day of volatility for the dollar. In 4 minutes. There it is. Now up 0.5% on the day, retesting November's high. The dollar might be looking to put in a yearly high. A yearly high into the end of this, what's that, 108? It could be putting in a yearly high into the end of the year. That's wild. That's wild. Holy shit. No signs of slowing either. Bitcoin, no. Bitcoin retesting that low, making me very nervous on it. All right. Let's take a moment and collect ourselves while the dollar pumps. We're on a 752 on a 25 cut. So who's got the answers? Who's got the answers? Why did this happen? Why is the dollar pumping so hard off of this? Obviously, Chir Powell is going to come in, give us a little more clarity, a little more, nothing speak. But who knows? Maybe he'll actually say something this time. Maybe he's finally found the data. We'll find out. Maybe. Yeah, that's a joke. So right above us, we have a poll here. 2,100 votes. Let's go, bros. That's amazing. Amazing. 3,200 viewers. Let's go. Hype it up. That's freaking awesome. Thank you again, one character, for the 20 memberships gifted. You are the man. I appreciate everybody who super chats, gifts, subscribes, all the jam. This polled 64% of us. Over 1,000. I'll say that's like 1,200 votes. Looking for that 25 BPS. That's what we got. 7%. I like it. I rabble roused that a little bit. That would have been the wildest card. 16% no change. That would have been all right. Honestly, it would have been. This is expected. These two kind of very little limited impact. This one would have been crazy. But I'm going to end this poll. It's time for a new poll. We have 25 minutes until Chir Powell, and the dollar's still pumping. Bitcoin now taking a dumpster here. Oh, taking a dump. We have broken that low, mirroring stocks and gold now. Bitcoin briefly held on to some strength. Let's zoom these all in. briefly held on to some strength. Very briefly. You know, even though Bitcoin did break that low, I'm going to say it. Bitcoin's still holding on seemingly better than stocks and gold into this giga dollar pump. New poll. We need it. Let me refresh this chat. We need it. You win. That's right. You are a winner. So, well, the new poll is going to be equally important or more important. Let's go. Let's get 420 likes. If we haven't had it already, we should. We need that. We need 420 likes on this kind of stream. This is a big day, fam. It is the last FOMC of the year, making it the most important in history of 2024. Who does it better? Gina. Oh, Gina. I like Gina for her. OG. Gina. Asian Gina. New challenger. Asian Gina. Or, I don't know, this poll is kind of gross. I can't even type. This poll is kind of gross. There we go. I want your honest opinions, guys. Who did it better? Who's doing it better? By the way, if you weren't here for the intro, if you missed Tom Powell, this is not only the last FOMC this year, but it is the last FOMC ever with Gina. Our Gina. I'm going to miss her. Ever. She is like going on to something else. I don't even know what it is. She's like, she got another job in Europe on something, and this is going to be her last one, to my knowledge, as a reporter on the FOMC, and that's very sad for us. Will alts pump off of that Gina news? I don't know, dude. That's kind of a crazy question to ask. The dollar, wait, let me scroll up. So who has a theory? Who's got theories on what's happening? Why is the dollar seeing so much strength? We got this same interest rate cut last month, the month before. Why is it that the dollar is seeing so much strength right now in this moment? What do you guys think? Do you think it's because the Fed followed through with its plan this year for 100 BPS cut? And maybe that's the market saying, okay, well, they said another 100 in 2025, so we're going to get another 100? I'm baffled. We follow these very closely. I will admit they're not always logical. The outcomes, they're not. They're always spicy. They're not always logical. The dollar is still pumping. It is draining gold and stocks and Bitcoin right now. Why? What do you think? Carry trade? Should we look at JPY? That shirt. What about it, baby? Welcome to the gun show, NRR. Gina. They are burning the dollar. Send them to lost wallets. I don't know, man. Burning the dollar, I guess. I mean, I don't actually think they're burning the dollar. But like, I guess that would make it go up. What are they doing? More quantitative tightening? I kind of doubt it though. Show key facts today. Yeah, we got rid of it. Key facts. I can't read those. The gold's still dumping. Stocks still dumping. Bitcoin still dumping. The dollar showing no signs of slowing down. What in the world is happening? Price filling a weekend gap on EU. What the Japanese decide today? It's time to look at the JPY, isn't it? It is. I forget who told me. They were like, make sure you pay attention to the JPY on the Chirpow day. I don't think the chart is going to show us much. We will look right here, right now. But ooh, gap down JPY USD. But what did the Bank of Japan? Guys, I need your help. I can't Google this while I'm live. I got too much to do. Someone Google. Everybody Google. What did the BOJ do today? They did something. Dot plan change. Maybe Irving. The BOJ did something today. Holy shit. Continuing to dump. Dollar still pumping 107,683. We may see a yearly high on the dollar today if this continues. What did the BOJ did? They did something. Stock market's dumping. Dixie's pumping. Yes. This is a Dixie Moon party, I suppose. Dude, these 1 minute candles don't even look real. This doesn't even look real. It looks, I don't know what it looks like. Fake out, bro. Maybe Gringeo. What is it? So much volatility as soybeans amassed. Soybeans. Are you a soybean bull? Maybe you are. Dude, JPY, eating absolute shit. Or no, JPY USD. Yeah, eating absolute shit on the whatever happened. Dude, BOJ did something. I guess I'm going to Google it because I didn't see anybody put it in chat. It's almost certainly related. Interesting, though, that nothing happened until the interest rate decision came out. Be careful trading, though. We still have 18 minutes until Chirpao comes on. And remember, the blueprint is usually something like this. I will say maybe we had the rally into interest rate decision. Wait, hold up. Interest rate decision rally. And then what? Down, reverse into the decision. Hold up, my brain's going slow. And then, boom, Chirpao going live almost always reverses whatever is happening, and we end up roughly where we started. Roughly. So be careful trading, please, please, please. Today is a very easy day to get liquidated. You don't want to get liquidated. BOJ is later today, but they have to have put something out, dude. They have to. Trump pump, maybe. Is Trump pumping it? Are we getting another Trump pump? Powell's going to say one thing, and these shorts are going to get nuked. Almost certainly, my friend. That bong rip before the stream got him? Ew, lucky. I wish I could take a bong rip around there. We're back on a gold standard, a Bitcoin gold standard, baby. Japan is asleep. True? True. Wait. Yeah, you're right. But, dude, there has to be. Bitcoin, 1 hour, Bitcoin head and shoulders. I'm sure there is. I'm sure there's all kinds of bearish shit. Look at that. You know, I keep saying it. There's so much going on that I'm like very ADD, distracted right now. Got to keep track of the times. Got to keep hyping it up. We are still actually... Bitcoin does not have a lower intraday low. Gold, gold did it right away. Stocks, intraday low. Or new low of the day, whatever you want to call it. Gold, new low of the day. Dollar, obviously new high of the day. About to hit a high of the year, maybe. But Bitcoin, okay, relative strength here. Bitcoin holding the lows. Still no lower low today, despite all these major markets doing that. That is interesting. The carry shade. I don't know if I can trust your TA when you're sober, Lars. Yeah, that's true. That's true. Starting to reverse? Maybe. I don't know, dude. I don't think it is. I don't think it's starting to reverse. I think we'll have to wait till 2:30 p.m. It's 2:13. I think the dollar is going to continue to show strength here. This is like a little breather candle. Today you should play it safe and not use more than 90x leverage. Gabe, your words of wisdom are wonderful. Wonderful. Bank of Japan may not increase the rate. Did I say bonk? No, I did not. USD JPY is the chart. You got it backwards? Well, I mean, they're the same chart. These are the same chart. Camaro, done wrong. I mean, they're the same chart. USD JPY or JPY USD, they're the same thing. They're just inverted. Nah, I mean, like you could just do this and now it's USD JPY. JPY USD. Okay. There it is. Dollar's still pushing. Wow. Wow. I did not expect this level of spice today. This is even spicier than I imagined. You all have earned the bong rip. Where's the dollar going? To the moon, I guess. A sinkhole opened up underneath the Bank of Japan. Matthew Miller, do you have a source on that? That'd be a good source. What's up, SJ? Who else is here? There's got to be new names I missed. One character, by the way. Thank you again, one character. Dollar breaking higher. For gifting those memberships. Maybe I've gifted so many this month. I need to stop paying YouTube. Because I get like some percent of this, but I'm really just paying YouTube to do it. But I'll rip off a few more for this spicy day. If you would like to be eligible for the memberships, they are random. All you have to do is make sure you've engaged with the live stream. YouTube says the more you engage, the more likely you are to get them on the live. Ooh, one character one-upping me here. Gifting more. Right back at you. What's up, Dominic Martin? How you doing, my friend? Subscribing. David Dakota Rogers. Joe Steen Hansen, how are you? These are the voyages in Quantum Vortex. What's up, man? Ghost is live. Keith Giles. 1966 Hemi. How you doing? Good car. Max H subscribed. Pickle gifted some memberships. I'm catching up here. Oh, that was 2 days ago. Why does it say now? I don't know. There you are. Memberships for everyone. For everyone. You have to opt into them too. It should ask you that when you join. What's good, baby? Let's go. Just minutes away. We need dubstep. I agree. I agree. We need dubstep. Put on Chirpao while I look for music.
Money machine going brr. Chairman Powell, he ain't playing, this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserves in control, making moves. Keeping that money flowing so the economy can groove. Share power, making paper every hour. Share power, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Oh, yeah. Oh, that's our song, baby. That's our song. We'll do no copyright sounds. Do a little NCS. Just in the background for now. It's gonna start off a little playful. Hold up. Oh, that's loud in my ears. Here we are, familia. The dollar, absolutely insane. There has to be something going on with the Bank of Japan. Maybe Chair Powell's going to give us a little more info here. There is only 10 minutes, 12, until Chair Powell speaks live to us via the Fed. If you need to go to the bathroom, if you need to grab a drink, you need to roll up, you need to roll one up, you need to crack a brew, this is your time. Go do it. Get ready. Because we saw insane volatility on the dollar here live at the exact moment of this interest rate decision, which I'm still kind of confused by. Still a little confused, honestly, fam. This is what the market expected. Literally, the market expected this. It was 99.8% expected. And as soon as this interest rate decision came out, the dollar went on a ripper, the likes of which I have honestly never observed live. A lot of you could be like, that's not that big. What is a dollar? 0.6% in 19 minutes, not even 20 minutes, is one of the most volatile moves I've ever seen the dollar make in my 8+ years watching the charts. Bitcoin, stocks, gold, all down against that dollar strength, kind of in unison. The dollar acting like a black hole right now, sucking up some of that value. What's up, Rigo? Either way, pump or dump, you win. You love this game. Welcome. Right on, Rigo. Hells to the yeah, my friend. Cheers. I'll have my little energy drink here. I'll have a brew with you guys after the live. A little bowl with you. But not quite yet. A Zantec AT subscribe. Mohammed Balshi. What's up, brother? I could shout out everyone who got a membership, but there's so many today. You know who you are. Extra props to you. This is wild, my friend. This is wild. Manipulation? Maybe. Maybe the dollar is now a meme coin. Is the dollar a meme coin now? Probably. It's always been one. You think 10-year notes hit a high? Okay. Ooh, Bitcoin dumping more. Breaking its low there. 10-year notes. We're talking about US 10s. 2 US 10s. An old chart. Or is this not what you're looking at? Very close. Dollar rolling over? I hope so, dude. Or is this not what you're looking at? US 100. When giving a chance to accumulate lower, maybe. Ooh. Okay. Yields. Yeah, yields blasted on that. Yields with a beautiful candle there. Certainly not like an all-time high. But maybe. Yeah, maybe targeting a yearly high. 5% now at 4.46. Boom, boom, boom. Let's go, fam. Dollar maybe slowing down. I hope so. Dollar painting its first red candle since the interest rate decision. Only 10 minutes till Chair Powell comes and really mixes this up again. I'm not convinced yet of the dollar actually relaxing here. Very tiny green candles on stocks and gold. Not enough to get me excited. We're on very low time frames, fam. Careful. Careful, careful. Have we accounted the following from the Fed due to inflation fears? the following from Fed. Wait, what? I misread that. Chat's moving fast. If it supports the goals, the committee decided to lower the target range for the federal funds by... Yes. That's what we're watching, Ryan. RYN. That's what we're watching. In 9 minutes, the head, the chairman of the board, Chirpow, will speak to us live, and he will give us future guidance, forward guidance. We'll listen to his rhetoric, his words, his tie color. We'll see how much he's sweating. See how tired he looks. There's a lot of factors that we are going to be paying attention to here, and it's just starting. We got our first taste of spice. 2 cuts down from 4 cuts next year. That could be. Less than 8 minutes to go. Let's go, boys. I never knew you had a membership gifts before you get going. Had to allow. Yes, Marlon Brando. You have to allow membership gifting, like to receive them. I don't know why. When you join the live, it should opt and say, do you want this? I don't really understand why. Like, it doesn't like renew or something. It doesn't cost you anything, whatever. And the more you like, subscribe, engage with the live chat during the live, the more likely you are to get them. You've been giving a lot away today. What's up, near Nilarka Berman? Subscribing. If you guys subscribe during the live, this will roll over in real time. It's very exciting. Your name will pop up just like someone just did. Let's see if their name pops up. Usually that works. What's up, Karsten? We're not alone. How you doing? You need a membership. You can't actually give them away specifically. I can't like give you one, Hoagie. It's weird. But you can randomly give them away. So you just got to be lucky. What's up, Jets? What's up, Vince? I think Powell is going to light the stage up. Lit the stage up. I hope he does. Qubit stock. Wendell, what is this? Sharknado on another account? What's up, Jeremy Vind? How you doing? LFG boys. LFG. Beam knows about the tie indicator. Would you drop 1K into Bitcoin now or let it drop more? Julio Sanchez, if I had $1,000 and I had no Bitcoin, I mean, it depends, man. Depends what that $1,000 means to you. Is that your life savings? Is that all the money you have? Is that just like the leftover from your paycheck this week? Like, if that's a leftover from your paycheck this week, throw it in there. If that's like your yearly savings, I probably wouldn't do lump sum anything. What's up, Lena? How are you, Lena? What's up, Treff? Powell is hacky sacking right now. He's probably smoking up that bowl, opening up his shorts and longs. Do you know what the Fed is and what it does? What's up, Brandon? Cactus Leo, Character 1, how are you, my friend? What are you feeling? Character 1, where's Gina? We need answers, I know. Gina will be leaving us, unfortunately. I probably should just look up what she's doing. She's got some other job. She's leaving us. Thank God for Asian Gina. When we needed her most, she appeared. Significant driver of the yen's weakness has been the interest rate differential between Japan and other major economies. Yeah, BOJ has been doing some weird stuff. It's like they're trying to hold the world hostage. I don't really know what they're doing. I'm not an expert there. I know that their rate decisions have been controversial every time. What's up, Savvy Symbiote? I see you, brother, subscribing. Astro Magnus. What's up, bros? Emma D. How are you? What's up, Cpina? ABDM Sam, how you doing? Ace of Hearts. We have just enough time to shout people out and then Chirpow will be live. Ace of Hearts, AH Dub, how are you, man? Modesy. What's up, Victor Barcelos subscribing. Shout out AMA24. Shout out Anime Channel 24. Shout out Anthony. Shout out Astro Magnus. Shout out Bad Fox being her bad self in chat. How are you, dog? Shout out Beam NSL. Burkier. Bluff Ironside. Shout out Brendan. Shout out Brody. Best luck. Shout out Cpina. Shout out Cactus Leo. Shout out Galizo. Shout out Karsten Pedersen. What's up, Cheka Kristen Croyboy? I like that name. What's up, Croyboy? Crypto Sharknado. Cowboy Crypto, how are you? How are you? Crypto Ace. Crypto Arrow. Crypto Steve O, my friend. Das Peach. David Brum. David Fear. What's up, Daryl? Shout out Domenico. Echo Leaf. Ellery Tan. Emma D. Fabio. Fern. Gabor Plays. Heaven Peck HD. Fire Futures. What's up, brother? Florin Rep. I got HD. Hoagie Sandwich. Jeanette. The wonderful Jeanette is here. How are you? Are you enjoying this spice, Jeanette? I'm enjoying it. What's up, Jichu? Jeremy. Kako N. Kevin is awake. KR. King Peasant. What's up, bro? Juan. Lars Larson. Lort Philbert. Lee Meredith. Lena. Little Fox. Little Fox and Bad Fox? Are you the Bad Fox is like the kid? I don't know. We'll find out. Looney, Long Mountain, Lunar Pulse, Manuela, how are you? Marlon Brando, what's up, brother? Mathis Larson, Matthew Schmeedy, my man. Max Wild, Mayanik, Lab, Mighty, Michael, Flavian, Mike Bennett, Mickle 911, Mr. Meaner, Mr. Bobby Fresh, Muhammad. We got so many viewers. Just under 3,000 live viewers, and Chirp How is about to speak. Hype up this live stream, friends. Hit the likes, subscribe, share it out. Just like Elemental Lipsa, Inderic Kalisalu, Jason Culliver have just done. Join us. It's going to get even spicier. We are minutes away from Chirp How, and we have already seen some of the biggest, craziest spice we have seen into one of these. Buckle up, boys and gals. What's up, MVK, Neil Bodel, Nirad Yelof, Oh No Y2K, Orange You Glad, Pakistan, Pat Kalioski, Paul Wood, Pennyways, Philip Klaus, Picky Repeto, R. Loba, Radostin, Gijorvi. We have 3 minutes. Rigo, can I get through them? Roro Crypto, Ruben Miranda, Rusted Woods, Rybread, Samuel Lee, Seth Smith, Skidmore for Less, Screamer, Slarvar, Spaceland, Starman. I might not be able to get through them. What's up, Surge Flux? Subscribe and I see you, bro. Sunny Singh, Stefan Mark, Sin, T. Morris, Take Profits, Pickle, Taunch V, Trade Intuition. How are you, friend? Treff. I have something for you, maybe Trade Intuition. Hit me up on Discord. To Butler, TZS, Long Nip, Up and Run, Victor, Barcelos, Wendell Sharf, William Alarevez, Willis T. Winston, Lala, Wrestling Rosie. How are you, Wrestling Rosie? Yadu, Silov, YouTube channel. How are you? Zigzag, my brother. Good to see you. And I'm sure I missed people. What's up, Mac B, Gaku, Bluff, Per Livin', Fat Tony, Don Pablo, Que pasa, man? Jamin Face, best FOMC stream in town. Sir, keep it up. I will never stop covering Chirp How, and maybe if he dies. But then I will run for the Fed for you guys. What's up, no one? Poor Man Jones, Positive Flow. Here we go. We have less than 2 minutes. Let me do on my side. I got to do some stuff to get this ready. Here we are. There we go. There we go. Here we are. Lighten it up, boys. We have less than 2 minutes. Just seconds to go until Chirp How joins us live. And this is already bonkers. It's already bonkers, man. It already is bonkers. Going to be looking for that reversal again as soon as Chirp How opens his mouth. And Lord, I hope it happens, because the dollar is punishing markets so hard right now. Bitcoin down, stocks down, gold down, everything down, while the dollar takes the stage into Chirp How's final FOMC of the 2024 season. Let's go. Can I get a Chirp How in chat? No, Chirp How. Can I get a Chirp How in chat? Because he's coming on right now. As long as we have a Gina, we should be okay. That's how I feel. Had Asian Gina not come to us at the exact time we needed her, I might quit streaming. You know, I might just be done, throwing the towel. No Gina, what's the point? But she's here. She's our savior. You're poor? That's okay, Poor Man Jones. I was poor too. A Chirp How. I see your Chirp Hows in chat. If you just got a membership gifted, put the emoji in chat. The Chirp How emoji. If you read this, give this video a thumbs up. Thank you, BN. I'll never stop Bitcoin. Bull market quote in its purest form. True that, Gabor plays. True that. I'm a perma bull. I'm a moon boy. Certified moon boy. That's right. Them Asians are good with numbers. She's good with the questions. She's a smart lady. What's up, Jackson? Worldwide. Chirp How needs more data. A Chirp How. A Jerome. Seconds to go, ladies and gents. Seconds to go. I'm going to turn the music off so that we can hear them. These FOMCs are notorious for awful audio. Absolutely awful. This is the worst. We'll see. Let me turn it up. Turn it up more when it starts. It should be starting now. Chirp How is usually late. He's a bit of a celebrity, kind of fashionably late. Comes on in when he wants. I'm going to refresh this because it should have started. Hold up. There it is. Gentle rustling sounds as Chirp How approaches the bench. Ladies and gentlemen, good afternoon.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a quarter percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina first, please. Gina, no one else for Gina.
Gina Smialik with the New York Times. Thank you for taking our questions.
They did it.
I wonder if you could talk a little bit about why
Shut up, Gina's talking. Everybody shut up.
To cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Great question.
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine
dollar still rallying.
Inflation.
New all-time.
So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher, You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of now 2 cuts next year compared to 4 in September.
Gina, again, no other questions.
Howard Schneider with Reuters.
I don't want to pause it, but guys, that may have been the last FOMC question Gina ever asks to Chair Powell.
Thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher. Less and uncertain. Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this.
People believe in inflation and
some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. as I mentioned, November is back on track. But once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
Is anything less than 2% more expensive versus last year?
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work, all of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow-up. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many, many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Asian Gina.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers.
As if he has like data.
So we have.
There's no data, bros.
We have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike. Jeez.
Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
So
certainly nothing has come down.
The risks that the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates, and we made, look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought 2 years ago, but it's nonetheless steadily coming down as market rents start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. I mean, a good example is financial services, which is really done off of asset prices, and that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight, but overall you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
He never says this much. What is happening? He's talking so much. It's wild. He always talks.
Thank you, Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. Job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So, but you're right though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think, you pointed out, participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market, and it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation's moving around by 1/10 every few months, that's, we'd have to weigh that against the fact that inflation has in recent months been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks of the two are, we think, are broadly, roughly in balance. And so that's how we think about it.
Steve.
Not Steve. Asian Gene or just
Mr.
Asian
Chairman,
Gene?
I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation. And that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard is to look, those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have, our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think it's 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair. Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course. That's part of what we do. But, we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of, just take the last year, we've seen inflation, over the last couple of years, come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. A lot of things move financial conditions around, as you know. and we don't really control those. But I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
He said it. He said it. He said it. Let's go. Let's go, Chair Don't let us down.
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
That's not what he asked. Keep going. You didn't ask that.
Hey, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand, and it has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see.
Dollar at a new 2024 high. We predicted this in the live today, fam. There it goes. Boom. Up past 108. We are seeing alts dump, and so is Bitcoin. We're going to turn this right back on, but I'm going to be going through some of these charts in the background. Stay with us.
To get 2% inflation. And, that's part of the reason that explains why we moved ahead today with the action, with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high. Wages are at a healthy and ever more sustainable level, wage growth. And so the labor market, this is a good labor market, and, we want to keep it that way.
Thanks.
I'm getting so many alerts. Holy shit.
Thank you. Amara Mokwe from Bloomberg News. I just want to put a finer point on the labor market. Can you keep the labor market this way, in the strong position that you have described, without further cuts? In other words, do you still view the labor market as needing support to protect against a further cooling?
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. Job creations are meaningfully positive. Wages are, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So, I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals, and we pay close attention to it, and it's worth noting that it is still gradually cooling, and in an orderly way. And that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Pump our bags, bro. You're not pumping our bags. Damn, turbo
Thanks so much,
trade
Chair
wreck.
Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now.
Sure.
Why do you think it is that inflation is proving to be more stubborn than you'd expected?
I'm getting wrecked on these boys. Pain is here.
It breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had to have had a deep recession and high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that prices went up by a great deal, and people really feel that, and it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices, and that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there, so that people are earning big real wage increases, so that their wages are going up. Their compensation is going up faster than inflation year upon year upon year, and that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year, what do you see as the biggest challenge to the economy under the next administration?
I feel very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Fingers crossed we bounce here. Ooh.
Thanks, Chair Powell, for doing the question.
Sure, Powell.
Edward Lawrence
Holy
from
shit,
Fox
we're down to
Business.
100K.
So you say that we're closer to the neutral rate. What % do you see, and the committee believes, where is that neutral rate?
So I'll say a couple things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance, and we're looking at the way it's hitting the economy. And particularly, we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be, there are things that affect the economy that are lasting but not permanent, and the ones that are permanent are the ones that would be in our star. The ones that could be lasting but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it. And I think we're in a good place. But I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
Yeah, I mean, honestly, there are countless models of
so
what a neutral rate might be at any
crazy.
given time. There are empirical models, there are theoretical
Seems like
models,
going
there are
back to
things that
104.
combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to, you know, the empirical data that are coming in and also how it's affecting the outlook. And it's not made any easier by the fact that, you know, that our policy works with long and variable lags. Nonetheless, that is the job we have, and so I think it's appropriate for us now to proceed cautiously, now that we're 100 basis points closer to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape, and these cuts will certainly help to support economic activity and the labor market, while we can still make progress on inflation because policy is still meaningfully restrictive.
That 4,000 Ethereum short not feeling too dumb now, is it? Oh,
hi,
up
Victoria Guida with
150%.
Politico.
You saw it almost liquidate.
I just
on
wanted to make sure
one
I
day.
understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's what's projected in the SEP, I was wondering what accounts for that? Why do you all see core PCE going down and potentially headline inflation ticking up?
So, and as I imagine you know, the goal overall is headline inflation because that's what people experience. People don't experience core inflation; they experience inflation, and that includes food and energy costs.
I'm not convinced they know what
overall
we
goal.
experience.
But as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately our goal is headline, not core. So your second question was what?
Why do you all see core going down but headline potentially ticking up?
So headline can be affected. You're talking about next year.
Mm-hmm.
Yeah, so headline can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year, but that's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Oh my God.
Do geopolitical risks factor in at all to how you're thinking about energy prices?
So we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks haven't really. Nothing has come out of those risks that has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of supply conditions, global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil. But we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
I don't think he's ever talked to this much. There's so many hands up. Where's Asian Gina?
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you
Kelly
said
O'Grady.
a minute ago, that wage growth is outpacing inflation now.
Ooh,
it
what's up,
wasn't
Kelly
the case for
O'Grady?
some time, of course. It's
I'm Irish
partly
and
why
allowed to do that.
Americans haven't felt much relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
Yeah, so inflation, again, we don't react to a couple of months of higher readings or a couple of months of lower readings. And what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation. It's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now, and we just want to hold on to it. That process will probably take some years, but that's what's going on right now. And I don't think that a couple of months of higher inflation really signal that anything of the nature you're suggesting.
And just one follow-up. Let's look more long-term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty. Very high uncertainty. We really, at that point, that's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now, and we're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down, goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong, though, that it's been a bit frustrating because while we've made progress, it has been slower than we had hoped. Nonetheless, we're still on track, and I think if two years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Go to Nancy for the last question.
No Asian Gina.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways.
The worst day ever.
Appears to be.
Bitcoin dumped. There's no Asian Gina. Gina's gone. It's bullshit. It's a scam.
Be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is,
Over the hill,
and I am confident we will achieve that. It has taken longer, but you have to be. We are making progress. We have made a great deal of progress, and we'll continue to do so, and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world.
It'd be a great trading
That doesn't
coach.
appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market.
No, they can't.
So,
at least you're not asking about
Thank you very much.
Oh my God, that was the most we've ever heard this man speak. We had no Asian Gina. This is a scam, guys. This is a straight up scam. I'm actually kind of annoyed. Where are my ladies? I mean, we got a few more new ladies, and they're not bad. But like, where's Asian Gina? She is our Batman. She is our Marvel hero. In the night when Gina left us, she appeared, and I'm gonna have to deal with this. I'm probably gonna cry alone in my room for a while after this, guys. Don't at me. What's up, CG113? I see you, man. Flying Benny, Kai, Anga, No X. I see all the subscribers. You guys are the best. This was different. Holy shit. The dollar. I'm still not 100%. I gotta do some research on. I gotta figure out what's happening with this. I gotta see what the BOJ is doing. A lot was going on during the live. Still haven't gotten to process it. I will do so, and we'll figure this out. No matter what happens, we'll be live Friday, 1 p.m. East. We're live here Monday, Wednesday, Friday, doing charts, doing trading live all the time. 5 years straight, going on 6. But the dollar, I have never seen it do this. This is absolutely insane. In the live stream, we did make this prediction in real time. But during the live, the dollar has broken to a new 2024 high. Wild. From no movement whatsoever to just blasting off. And guys, there's very little resistance, maybe no resistance, up until like 110 on the Dixie. Here's my only skepticism, my only kind of thought about this though, is that our year wraps up really soon. Really, really soon. Before you know it, it'll be 2025 with 13 days, not even 2 weeks. And when this candle closes, I kind of think that we'll see the brakes pressed on this rally. My guess is, your guess is as good as mine. This is wild. Did not expect this. I've got homework to do. Dominance gaining some strength here off of a greater, not just crypto, but like seemingly total market sell-off. Stocks down, gold down, meaningfully down, while the dollar took the show, really put the stranglehold on everything else. It's been quite a ride. I put a little long position here. Hope it doesn't get wrecked. But we're still fine. This candle's bad. It's bad. But taking a look at the chart, what are we doing? We're back testing 101 as support. Holding support here would actually be very strong. Obviously, we lose it. We'll go back to the drawing board. We'll think of some other things. We'll figure it out. But so far, this is not so bad, man. This is the original fractal. Here we are, back at the bottom of the channel. It's cutting it close. I'd say if we get a candle close below 100,000 now, this fractal may be done. It may be cooked. I think it's holding on by the hair in its chinny chin here. But we had some significant resistance at 101 on the day. Here we are hitting that number almost to the T. Like, this is it, bulls. This is it. You can trade lower intraday. I would say you can go as low as 97, 96,000 intraday. But I cannot see a close down there or else things get very ugly very quickly. That was just, what a weird FOMC. Maybe it's because we weren't here for the last one. I don't know. I don't know. Just felt different. Maybe it's because Gina's leaving us. So bad. What's up, Vegna? Here's what we're going to do, fam. We'll be live again Friday. Maybe we'll be live again later today or tomorrow if things get very hot. If we see a new all-time high or significant selling, we will go live emergency style. So make sure you are subscribed. Your notifications are on because you do not want to miss that. You do not. You want to be here if we go live emergency spice style. We just launched a new trading course. And guys, we are still building on this. We just launched it. There's some good materials. We are going to have our first exclusive content, live content on Friday of this week after the channel's live stream. There's still time to sign up. I believe there is still that coupon code. I tweeted it. It is half off. Where is it here? Let me give you guys the rest of this. We had about 5 people sign up, I think, yesterday. Here we are, right here. I'll just pull this up. I tweeted this out yesterday. Basically, get half off for life with half off for life promo code. I'll put that in the chat here, right here, right now. Early birds will get rewarded. There might be some promo codes going forward, but they won't be as good. They'll get slightly less over time. But I think there's still a few more uses on that. Check it out. Join us on Friday. Man, what a day. I did not see this coming. What else? Jump in the Discord. We got the goodies. I don't know, man. I don't know. Check out the group. Brand new, so we're still figuring it out. We're still figuring how we're gonna, I don't know, where we're gonna spread our wings here, but I'm going to do everything I can to add value there. It's my life work now. I think that's gonna be it, fam. I think that's it for the day. I love you all. I will catch you on Friday, maybe earlier. That's it. Crown out.